glad everybody could be here today. We're going to talk about the super fun topic of insurance with everyone. With us, we have Jeremy Thomason and Jeremy Kitsos. If Jeremy Thomason, by the way, because we have two Jeremys, Kitsos will be JK for the rest of this call, and then I'll just call Jeremy Thomason by Jeremy. Jeremy, you want to introduce yourself?
Yeah, thank you. Name is Jeremy Thomason, and I'm a managing principal for Convelo Capital. We're a small boutique real estate firm where we have assets in Georgia and Texas. Banker by sort of training and background, but I got the real estate bug 20 years ago, started buying single family, and that overtook me at some point, and now I'm headlong in the multifamily world. Have led asset management and investor relations for large institutional shops, been very involved in the insurance discussion there. And then as we get into this more, you'll understand the fun that I have with being a smaller shop and insurance, which is part of the reason why we have this call today. And just for giggles, I do have a property and casualty insurance license from way, way, way back. But when I got it and I took the test, I just keep doing the COE. Why wouldn't you?
Exactly. So, and also with us is Jeremy Kitsos.
Yeah, thank you, Jim. Jeremy Kitsos from Mobile, Alabama. I'm Senior Vice President with Hub International. I've been involved in the apartment world for about as long as I can remember now. I started out at 21 with a real estate license, quickly learned through 08 and 09 that may not be the best profession for a young 20-something-year-old, and I moved into the multifamily management world. Went to work for a regional property manager, had around 12,000 units at the time, but that's where I was introduced into insurance from an apartment standpoint. Been in the apartment business 17 years. I've been at Hub for 15 of those, and I've led the real estate practice here at Hub, specifically focusing on multifamily.
And I'm Jim Ellis. I've got a degree in risk management and insurance. I'm in the restoration industry currently, but I'm going to go ahead and get us started today. JK, what's the market looking like right now? Where are we in the property world?
Yeah, absolutely. I mean, finally, we're being able to take a breath of fresh air in the market. You know, we all know after 2020 and 2021, the market went extremely hard in late 22 into 23. Last year, we saw reductions starting to happen. This year, we've seen nice double-digit decreases, mainly brought on by carriers being able to write larger line size, more capacity in the market, getting back to what they were doing before. And now that we have not officially, but almost officially made it through hurricane season without any major impacts to the mainland here in the U.S. Insurance losses are low there, which means the market's flooded with capacity. And I was in the airport yesterday, ran into an underwriter from one of the major E&S carriers, and they said that they've already passed their rates for first quarter of next year, and it's 18% decreases on average. So definitely an opportunity to get creative, build some programs. We're working on a multifamily program right now in London. We hope to have that ready to roll 3/1 as well. So
when it comes to, and a lot that are going to be on this call, they're independent rental owners are smaller. So getting to be able to think of stuff as the largers, like what they have, working for them. It just in case, somebody doesn't know what the statement of value is, like quickly go over what a statement of value is, the importance of it, and what its tool is in the insurance buying process.
yeah, absolutely. I mean, look, as a broker, our number one goal in most clients' eyes is the buying of the insurance. You know, we look at it a lot differently as far as claims management and things like that. But, you know, as a buyer of insurance, I'm an investor. Like I said, I love real estate. I invest in multifamily deals as a small partner or whatever it may present itself that I can participate in. And so when I'm out buying insurance, I'm buying it from that view. Which means we want to get the best coverage at the best premium every time. And to do that, we've got to give these these underwriters better data. And so on our team, Jim, as you know, we have a submission builder. That employee's sole responsibility is making sure that they're building the best submission that the underwriter has on their desk. That means having the most complete statement of values. That means having the best narrative. That means telling what work has been done and what work's planned to be done on a single asset or across the portfolio. And so when you can provide that in a way that makes the underwriter's life easier, giving them the answers to the questions before they ask them, it makes them want to work with you, especially at a time where underwriters have more accounts on their desk than they've ever had. And so it's even that much more of a priority to deliver quality.
What tips can we give to these independent rental owners about like helping to build out that narrative and statement of value statement for them?
Yeah, I mean, look, we know anytime there's a request of questions that comes through, people kind of stand back. And, as independent rental owners, you have a lot on your plate. Dealing with insurance is not your primary responsibility. However, in this market, you can really help yourself by taking the time to answer those questions thoroughly, to go dig and find out if you recently acquired a property and the roof was replaced maybe within the last 5 years, but you don't have the exact details. It's worth it for you to go dig and find that information to provide your broker so they can negotiate the best terms for you. That would be my biggest piece of advice. Put in that extra work on the front end if the questions are being asked to help yourself.
And Jeremy Thompson, I'll kind of switch to you for a second. Yeah, kind of what we're talking about. Like insurance is no longer a passive line item. It's now a strategic factor that can make or break a deal. As an executive of a management company navigating this insurance environment, can you walk us through how the rising insurance costs have really changed the way you approach budgeting and capital planning and risk management?
Yeah, I mean, the reason we're talking about this is because it's become more and more painful. I bought a deal 6 years ago. I was 500 a door all in, and then 2 years later, I was over 1,000 a door all in. So I had 100% increase, which was just impossible to budget for. You just had to grin and bear it, and we certainly weren't escrowing at the right level. So it was for a smaller guy, it's like all of a sudden when you got to come up with an extra $100,000 because Fannie's not escrowing right. And I'm not blaming Fannie. That's just sort of what all of a sudden there's this reckoning. In the last few years, across our portfolio, we got 7 assets that are on average about 35 units. We've seen on average over the last 4 years about a 7% increase in our insurance costs. And that's just sort of building on 5 or 6 years ago, 100% increase. So that's the pain is that it's less pain than 100%, but it's still way more than what we underwrite on expense growth. And for us, insurance last year was our third largest expense. So it is absolutely something that can make or break the deal. And so I'm on the front end of the deal right now. Insurance is always like the very last thing that comes together before you close, which is always frustrating. But it's true. I used to sort of be in the mindset, don't take offense, brokers here, but I used to be like, hey, I'm going to work with my broker and he's going to give me the best deals. And I like all you guys. And then you sort of get, holy crap, this number's way too high. And I didn't really go out and sort of test the market to see. I'm just trusting my broker. And what I've learned over the years is that you guys are creative. There'll be closed markets here and this market there. And so you end up really needing as an operator on the acquisition side to get quotes. And when you find a program, you don't know if that program is going to be there the next year or not. So you just sort of always have to have your ear to the ground on the different insurance guys that are playing in your market because it can make or break whether you win the deal. And if you plug a number, which is what you often do, and then all of a sudden it comes back really hot and you tell your lender and their underwriter what your insurance is, then all of a sudden your proceeds on your loan goes way down, and now I got to go raise more equity. So it is a trickle event that happens for us smaller operators. And so being able to peg it at the front, whatever it is super important. So we need to be able to predict, and that's been hard with the large increases. But then the bigger point is it has just been going up. So I was glad to hear what Kitsos was saying about what this next round may look like. We may actually see it have crested and maybe come down a little bit. That will feel really good.
Yeah, I mean, I've definitely seen that we've finally hit the market correction. I think Kitsos would agree that we're there. We've seen, you know, an insane market over the past 4 to 5 years, and I don't know if you want to chime in on that.
Yeah, I mean, you know, it all started in 2017 when you had Michael that first hit over in Panama City, and then we had Harvey over in Houston, and then, like I said, 2020 was more storms than had ever been on record. And so you coupled that with COVID, where supply chains fell apart, so then construction costs went up due to material shortages. It was just the perfect storm. You know, the joke that it's kind of going around the market right now is, well, carriers have a shorter term memory than the lenders do. You know, we're kind of right back there, but all that is because of capital. It's all how much capital is flowing into the insurance market, and when that supply demand flops, you know, we're going to have an excess of supply going into 2026, which is going to provide a huge opportunity. And to Jeremy's point, you know, talking about making sure you're aware of everything that's in the market, you know, you really just got to find your broker that is an expert in what you do. If you have the right broker that's working in that market every single day, and market meaning industry, not specific location market, but working in that industry every day, placing business with their finger on the pulse of what the market's doing as a whole every week, then that's your best avenue of having the best terms every single time. That's how, you know, we like to operate. You know, finding somebody with that mentality is definitely how owners go. You bring in too many brokers and you're hurting yourself, because if you split the market, well, then broker A may have a couple of carriers and broker B may have a couple of carriers, but the best solution may have been a carrier that each of them had working together. And that's what you want to avoid.
And that's what that was my next talking point, was interviewing your broker before. So it's shopping the market, making sure that you have all of them, but going after, can you speak more to the benefits of that single broker? You know, basically going through an interview process of picking out that broker and then letting them go to multiple carriers, because of the fact that the submissions, you know, getting flooded.
Yeah, absolutely. You know, like I said, underwriters are seeing more submissions than they've ever seen. You know, it was that way in 22 to 23 because the market had flipped and 100% increases were happening. So everybody was shopping. Well, now everybody's going to know that the market's turning as well. And so if a broker's doing his job, then he's going to have those submissions out to market, which is going to cause another bottleneck into 2026. As there's just not a lot of new underwriters entering the workforce, kind of like we're seeing across every industry. Insurance is no different. So taking the time to interview a broker to not only understand, okay, what's your market access, but what resources do you have that can help on the front end of an acquisition, that can help on the back end? What do you have for claims management? What do you do regarding claims? All of that is what is going to ultimately deliver you the best program year after year, long term. You know, we strive for long-term relationships. You know, we hover right at a 94% retention rate, even with, you know, transactions and property selling, because we know that that's what these owners, just like you're talking about, Jeremy, that's what you're looking for, is somebody you can rely on, trust, that's going to cover the market.
Another talking point for us is going to be tenant legal liability. I can it if you don't if, you know if you're a 1 to 2 unit independent rental owner, it's something to it's for everybody, but it's requiring that tenant to have it for when they have. I mean, I've looked at so many loss runs where it's the fire started from leaving the stove on, or a flood from just mismanagement of them, and that hits your bottom line, your loss runs a lot harder. I know, Jeremy, we were talking earlier, you've utilized tenant legal liability programs, and just if you could educate those that are listening today about how much that can assist with the bottom line.
Yeah. So tenant legal liability is it's a big deal, and probably most leases require the resident to have some form of liability protection in it, and there's a whole bunch of different ways that this can get solved, but in essence, it's if the tenant does something that was their fault. So they left the stove on, there was, a grease fire, smoking, a grill. Those are the kind of things, usually fires, not always, but there's usually fire kind of things that there was obviously the tenant's fault. Most tenants are not going to have the financial wherewithal to cover a $36,000 redo of a unit that got burned up. So they need to have insurance. And they need to have insurance, renter's insurance too, because our policies as the owners don't cover the renter's stuff. So the renter needs to have renter's insurance. And usually whenever you're buying renter's insurance, you get the liability protection as well. And there's a bunch of different ways that this can be done. Traditional renter's insurance with liability. There's loss damage waiver programs out there that are very nominal in cost. But as an owner, what I'm wanting is all of my residents' liability coverage to be there in place. And there's a lot of different providers out there that provide programs to make that happen. Because when they have that kitchen fire, I may have $100,000 deductible on my community, or even $25,000 deductible. And if it's a $15,000 fire, I'm probably not going to want to go file a claim because I don't want that loss on my run, and I wouldn't have got any money anyway. But that $15,000 got to come from somewhere. Well, hopefully, that sounds weird, it was the resident that caused that fire, and that they will have coverage in place. So we're big believers in it. And the part that is often not understood about these programs is along the lines of that SOV talk that we were discussing before. If I'm tight with my story, and my story has a bullet point in it about, hey, we have 100% coverage on renters liability across our properties. If I'm underwriting or I'm a market that's about to write the big policy, the property policy, and I hear that makes me feel good about that operator, and that he gets it. And so whether or not there's actual math behind it that they give credit, hard to know. But it's a talking point in the story about risk mitigation that IROs should at least understand, because you're going to protect yourself not only from that kitchen fire, but you're also going to have a story that you can relay to your broker whenever you're getting your renewal or whenever you're getting a new property, as part of the reason why you are a good risk for them and the premium should be lower, in simple terms.
That's a great point, Jeremy, that you bring up, of really just keeping that backlog of notes of, and helping your broker out and about this, telling the story, the narrative. Because at the end of the day, if for that underwriter, they've got this submission that sometimes can just be a lot of numbers that they're looking at. And when you can tell a story, then they see, wait a second, this owner has, ownership. They're really about wanting to be the safest, and not just I want, bring in the cash. They want to have the safest property. So being that proactive risk manager, and being able to say, no, we've gone as far to have the TLL in place. That's a great point to bring up with it. Moving on from there, one of the last topics to talk about is, Jeremy and I know we talked about the fact of the law of large numbers. with IRO, it sometimes feels like, you're David versus Goliath in these situations, and there would be work involved with it, but there are ways to kind of form a group. And I didn't know if you wanted to.
Yeah. So I have the privilege of being involved with NAA and their IRO committee. Um, and the IRO committee, it has two aspects to it in 2026. And one of those committees for IROs is an open committee. And my involvement in the leadership of that open committee next year, we were talking this past year about this problem of insurance and this concept of, man, our premiums are out of control. I'm not necessarily an expert in this. It just feels like that we're always in a disadvantage compared to the big guys because they have their big, huge master policies and they go to London and they do all these fancy insurance things. And here I am with State Farm, not picking on State Farm. But that's the kind of mindset that happens. And so we were getting together last year or this past year in some of our meetings, and we're like, well, I wonder if there's a way under sort of the NAA IRO banner that we could work together and take the law of big numbers that's a disadvantage for us as IROs and turn it into the advantage. And so one of the things that we're going to do in 2026 is bring together in our IRO committee a project where we're going to explore how to create, for lack of a better term, a master policy for NAA IROs. How we do that, don't know yet, but it's worth exploring. We might get to the end of it and realize, you know what, it just doesn't work because we're in all these different markets and the risks are different. It might not work, but we felt like that we should at least affirm that it doesn't work, and we might get lucky enough and actually come up with something that does work with the help of big guys like Jeremy and you, Jim, that are in this industry. And we say, you know what, how could we do this in a way that all of a sudden we have a program for IROs that they can come tap into, because insurance is such a nuanced thing, and then really help us get the law of big numbers behind us instead of working against us, which is sort of what happens with the smaller guys. And I know none of these brokers that are on the call today would ever shun an IRO, but that does become part of the challenge is, if I'm going to write a policy for a 10-unit deal or a 50-unit deal versus pursuing some guy or some operator that's got 50 properties and they've got 10,000 units, the premium is just very different. And so the motivation is, how do we come together in a way to let those law of big numbers work for us and not against us? We feel like there's something there, and we're going to need everybody's help next year in 2026 to play that out and run all the traps and figure out if it's something we can do.
And so, and we didn't talk about this, so I apologize for throwing you on the spot. But is this just something where people in the IRO can just raise their hand to be a part of that open committee?
Yeah, the NAA is changing this year. They're in the middle of changing how all of the committees work. And so for IRO in particular, there's going to be a governance committee and there's going to be a strategic initiatives committee. The strategic initiatives committee is an open committee. So anybody that wants to get involved can get involved. And we want as many people to be able to be there at our different events across the year, advocate and departmentalize and assembly of delegates. And then we have IRO meetings. We have the IRO Summit, obviously, that you're listening to right now. So the idea is that we want everybody to be involved and not feel like that they have some high hurdle to get selected to be a part of a committee. No, it's an open committee, and we want everybody to be involved. And your voices are going to be important, especially when we get into trying to create a program that could potentially work in most states. Well, we want to make sure that your state's represented. And so I do business in Texas and Georgia, and that's different than New Mexico and Florida. And so, maybe we can't do it in Florida because there's too many hurricanes in Florida. I don't know. The answer are going to come as we investigate this further.
Well, I applaud, the effort and everything that getting this together, because this is IROs looked at being small, but the voice is loud. Everybody working together can really get a lot done. So I appreciate everyone's time today. I appreciate everyone who's listening right now at the IRO Summit. Recap is where we are. Market is looking better right now. So hopefully we keep going that way. Importance of really telling your story with your SOV, doing that little bit of extra homework to just help it out. Moving forward, making sure that you're doing an interview process and keeping your broker, in check, keeping them honest, and maybe shopping your broker, but keeping it as one broker that you're letting go to market with everything. And then really making sure if you do not have tenant legal liability coverage in place, making sure, because one thing that we didn't bring up is that those losses do not show up on your property's loss runs. So to all those carriers, insurance carriers out there, that loss that you're getting paid out by that tenant legal liability policy, that is being paid by your tenant. And it really does help you at renewals and being able to find new markets, going from there. And then as Jeremy just put it, really raise your hand. That if it's nothing more than let's have this discussion, let's see what might be out there. If we find out that it's a no, then we've put in the effort that it will probably help out all of your narratives when you're going to market going forward. But that's all that I have. Does anybody else have any closing remarks?
I was just going to say the TLL piece, it also helps on transactions when you go to sell your property and you have to provide a buyer with loss runs, and you can show them clean loss runs. That's going to help them get the insurance they need to make the numbers work as interest rates hopefully keep going the right direction.
No doubt about it. Yeah, so I love the IRO space, and I love taking learnings from what the big guys in our space do that have whole departments that worry about risk mitigation, and then taking those learnings and then bringing them into this community, this IRO community, where we wear so many hats that it's hard for us to be absolute experts in any one thing because we have to wear them all. So leveraging this summit today and leveraging this particular topic is just a great way to really force multiply our effectiveness as IROs, and looking forward to 2026 and working with everybody that's on this call today. Just raise your hand.
Perfect. Well, thanks everyone, and thank you everyone at the IRO Summit that has been listening in. And we'll see everybody at AOD, and then I guess we got Advocate and Apartmentalize, and then AOD again. So,
Yep.
Bye everyone.
Thank you.
Thanks.